Hello, good day. This is topic 3, Islamic economic and financial institutions. Why Islamic economics? Islamic economics is a newly emerging discipline that takes the lead in resolving newly arising economic issues from the viewpoint of maqasid. What is maqasid? It offers a vital source of inspiration for the ideal characterizations of an Islamic economy. Islamic economists address three central problems: production decisions, management decisions, and distribution decisions. Now we look on the Islamic financial system. They are similar with the conventional system. They comprises financial institutions such as Islamic bank, Islamic insurance, which is takaful companies, Islamic mutual funds, and other finance companies. So, in Islamic financial system, they are just like conventional, but they are following the Sharia principles. Under Islamic financial systems, Islamic financial markets, institutions, and instruments operate in line with Sharia rules and principles. Remember, Sharia here means Islamic law. The basic functions of Islamic financial system is to channel the funds within an economy from surplus funds units to deficit funds units. Surplus funds units here means those who have extra and they keep their money to the bank. And we have deficit funds units, mostly governments and big corporations that needs more money to run their business or activities. So we look on these definitions. What is DFU and SFU? DFU, mostly governments and companies. They have a lot of projects, but they have deficits in their money. Whereby SFU will be ordinary salaried household who often spend their incomes over extended periods, thereby putting aside some saving for an investment or future consumptions. The concept of Islamic financial system must conform closely to Maqasid al-Sharia. Remember, Maqasid al-Sharia here means the objective of Islamic law and deliver the main objective of financial system, which is to mobilize investable funds, pulling them together and making them available for productive investment purposes directly or indirectly. Now we look on the roles of Islamic financial institutions. It provides a linkage between lenders and borrowers. So these Islamic financial institutions will provide products for investors like us to invest our money. So we as the investors, we want the products that can give us more when we invest our money. So for the borrowers, they provide the products that will help them to borrow money with a lower cost. They gather and process information, asset transformation, and efficient functioning of financial system. In Islamic financial system, they comprise of Islamic bank, Islamic investment bank, financial and capital markets, surplus units and deficit units, and they also facilitate intermediations. Islamic banks, they are intermediaries between the saving surplus and the deficit units. However, instruments of interest is replaced by a number of instruments. So this is not easy to replace interest in the transaction. So they come out with a number of instruments to make the transaction legal and Sharia approved. While conventional banks mainly pay and charge interest in their operations, Islamic financial institutions have to avoid interest and use more than one key instrument as the basis of their intermediary activities. In Islamic investment bank, they also have products and services that Sharia compliant. They must invest their money into sources which is approved by the law of Sharia. They manage portfolio for institutions, corporate clients, high net worth individuals, investment vehicles, unit trusts, and mutual funds. In Islamic financial markets, they uphold the importance within the Islamic financial system as conduits of funds between SFU and DFU within the interest-free realm of Sharia, thus distinguish itself from conventional markets that operate on the basis of interest. So this is types of Islamic financial markets: debt and equity markets, money and capital markets, Islamic money market, Islamic capital market, primary and secondary market, organized exchange, and over-the-counter market. So everything has been provided by conventional financial market. Islamic financial market also want to provide same services. Islamic money market, the purpose of Islamic money market is to serve three main functions. Liquidity management, serve as an avenue for Islamic financial institutions to source daily funding or to invest in the short terms. So they enables Islamic financial institutions to maintain optimal liquidity, thereby allowing them to meet customers' demand at any time. They also give flexibility to Islamic financial institutions to face everyday liquidity situations that might arise due to different timing of cash inflows and outflows. Secondary trading of money market instruments. Depending on the objective, risk, and return preference of money market participants, they will either buy or sell money market instruments in anticipations of obtaining investment returns. Instruments available in the money market provide investors with different levels of risk, return, and maturity. For example, Islamic treasury bills. Last one, channel for central bank to conduct monetary policies. Mechanism is same as conventional. The central bank undertakes open market operations by undertaking repurchase agreement and reverse repurchase agreements, repos, and Islamic money market, sale and buyback agreement and reverse sale and buyback agreements. Now we look on the Islamic capital market. An Islamic capital market comprises two main components: debt market and equity market. They are indispensable for the efficient mobilization of resources and the optimal allocation, which deeply rooted in Sharia teaching. So this is three types of capital market products: Islamic stocks, Islamic bonds, i.e. sukuk, or Islamic real estate investment trust, IREIT. In primary and secondary markets, corporations and government agencies use primary market to raise funds from initial buyers of a security. A secondary market is a financial market where existing securities are bought or sold. So this is just like the conventional primary and secondary market. But the thing is that they must comply with Sharia. This is all for this topic. Thank you.